what we're seeing is going to likely be happening, and what does this mean as you start to open up, and how do you navigate through this and making sure that your finances are in order to get there. So when we look at it, and this isn't the first time that we've had a crisis in the world, but obviously the first time that we've had one this severe in the modern economy. And there is going to be a long list of things that are going to change. And there's going to be phases that we're going to go through in terms of what we're going to be dealing with. And whether you're retail, just a regular owner managed business, a wholesaler, restaurants, everybody's going to have their challenges. And I think that we can look at it and say that there are 6 key areas that we're going to be looking at as the economy starts to open up that we need to understand and how it's going to impact us. And we've seen it that the e-commerce boom has already started. We're seeing businesses pivoting and becoming more online, and I think that that's going to continue to go. Unfortunately, we're going to see store closures. People will not reopen in some circumstances. But what that's going to lead to is a consolidation in the industry, where we might have had 15 players before, we might be down to 10. And so what does that mean, and how can you take advantage of that? The focus on health, safety, and cleanliness is not going to go away. Even once we have a vaccine, that's going to continue to be there. And there's a cost with doing it, and we need to understand within our own businesses how that impacts us and how we're going to be able to work through that. The sharing economy is going to get slowed down, through the fall into the spring. Hearing a lot about all these shared resource centers and people coming together and working collaboratively. That's going to slow down now. And how does that impact us? And then, of course, workplace flexibility is going to be there as well. And how does that impact us going forward financially? Because the cost of staffing is going to go up. So while we're going to be talking about finances, again, like I said, it's important for us to understand these 6 phases that we're going to be going through and how to manage our finances through it. So when we start with the e-commerce boom, is this going to be a new golden age? What we've seen right now is that people have moved to selling online more. They're going to be going. They've set up shop. They've been able to go and transition to it. So what does this mean to us, and how does it go? And Krishna is going to be doing in one of the upcoming sessions, how do you transition to a more online, get that better presence? And I think it's really important for us to look at our business and go, is there a way to be online? Because not only are we moving towards it, the consumer is going to start to expect it. And if we're not doing that, how much does it slow us down? When we look at grocery, pharmacy, other low penetration formats, they're a prime shift for e-commerce. I was looking at Save On today. We were doing online shopping up until the pandemic hit, and being able to go and pick up our groceries there, wait in our car, and not go in. Since the pandemic hit, today is the first day that I've actually been able to log into my account and I actually see where I can book to go and pick up my groceries going forward. So again, there's been a huge uptake there. We're already seeing it. But then the flip side of that is, how is it going to be a shift in our employees? How are we going to be able to deal with shelf stocking, store service, if we have products in behind, in our back rooms, in warehouses? What does that mean, and how do we deal with it? And what does it mean from a cost structure? Because if we're going forward and dealing with things like we're going to be doing more online shopping, does that mean that if I'm a seller that I'm going to have to go and stock more inventory, which means there's a cost to me? Or am I going to be going and starting to look at things like, well, if I'm going to do direct ship from my manufacturer or from my supplier to my customer in an online shopping environment? These are the types of things that we need to look at and see, are we able to go forward, and are we able to shift our cost model so that I can go and maybe have less inventory, which gives me more availability of cash flow going forward as part of the e-commerce boom. So those are some things to consider on the back end of it. But again, we have a great session coming up next week with Krishna that will help you guide through that part of it if that is something that your business is going to be needing. And the next topic, unfortunately, is the accelerated closure of some brick and mortar stores. And looking specifically on the retail side, the COVID crisis has seen an acceleration in this. We're seeing Home Outfitters shutting down, Town Shoes, Bentley Leathers, Things Engraved. Lowe's and Rona were in trouble before the crisis even started. And what we've learned from this is that a lack of cash flow and businesses going paycheck to paycheck, which there's a lot more small businesses out there that are paycheck to paycheck than you would think. That puts them more at risk when you don't have that runway where you can operate for 2, 3, 4 months with a slowdown in sales. That's going to give you issues. And then the other thing is that if you aren't pivoting, you're going to be critical. It's going to be critical to be able to move forward. You have to shift because the world has changed. And if you aren't able to change your business model, you aren't going to be able to survive going forward. What's interesting though, when we look at some of these store closures that have happened, and I'm going to pick on Town Shoes as an example. If you've ever been in a Town Shoes, they are basically a shoe store outlet. You walk in the store and there's boxes and boxes of shoes all over the location. The problem is that they have so much capital tied up in their inventory that when all of a sudden the stores close and they're not able to go and have people walking through and buying it, their cash flow dries up because they need to be turning that inventory over constantly in order to be able to survive. And so one of the key things that we need to be looking at is what do we have in our business in terms of our inventory and how do we manage it? I talked about it when it came to the e-commerce boom, but right now we're in a time where having cash is so critical. So if we aren't able to free up our inventory, how are we going to be able to go and continue to move forward and have that cash flow available? Because inventory is money. And whether it's money that we've already spent or money that's going to be coming in, that in between time, there is a cost to us. And so we need to be looking at our inventory and how we can go through and dealing with being able to turn it over. Now, while for the businesses that are closing, there's a large negative. Increased consolidation is the next phase, and that actually can be a big positive for you. And what we've seen in previous crises is that businesses will start to consolidate. Some aren't going to make it, which means there's going to be less players. I was talking to a restaurant not too long ago, and they were talking about, are they going to be able to survive? And what are we going to be doing in this post-COVID world? And they said, we aren't going to be able to make it there. And we're seeing that 30% of restaurants may not make it out. But they're seeing that they probably will be able to do it, but they're unsure if they want to. The message that I was able to give them, though, was, well, if you're one of the ones that are surviving, you're going to have 30% less competitors. And so what does that mean to your revenue going forward? Because now people are going to have less options. You should see an increase in revenue if you're able to shift into dealing with what has to happen with PPE, with still doing the takeout orders, online orders, using delivery services, and all of those types of things. And then the other item that you want to talk about is that if you have competitors that are closing, are you able to go and buy their customer lists? Are you able to go in and look at things like, what about their inventory? What about their equipment? Is there an opportunity for me to go in and help help myself by going and purchasing these items for them, which will generally be at a discounted price? We don't want to be circling like vultures, but the reality is that when there is a business that is closing, there is an opportunity to restock our business. So when you're looking at this phase, you need to be looking at it now and saying, where does my cash flow have to be 1 month, 2 months, 3 months from now when I start to see changes in my competitive landscape? And am I able to go and generate enough cash flow now or have enough cash flow in the bank in order to be able to go and take advantage of some of these opportunities, especially if you're able to purchase inventory? Because if you are manufacturing something and you're able to go and purchase inventory at a discounted price, that's going to be helping your margins as you come out of it. But the flip side of it is that you need to have the capital in order to be able to go and take advantage of those items. Then we have the slowdown of the sharing economy, which is going to be another lingering effect of the post-COVID-19 world. And we're going to be seeing that there's going to be smaller groups, virtual gathering, private shopping. And the concerns about physical privacy and a preference for new versus used and sharing assets is going to be a big change. When we look at sharing assets, my wife is a teacher, and we're looking at the schools reopening. Well, when the schools reopen, kids aren't going to be able to share their pencils. They aren't going to be able to share their Chromebooks, binders, that sort of thing. When we also go and take this to a retail space. If you go into a clothing store now, if I go in and I try something on, am I gonna and I decide not to purchase it, is the store able to put that piece of clothing back on the floor right away? Or are they gonna have to go and put it into the back room to sit for 24 hours to decontaminate before we can go and deal with it? Looking at your business and looking at how things are shared is going to be critical, because when we look at items like, I can't share equipment anymore. If I was sharing a piece of equipment with another company, am I going to be able to do that? If I'm a retailer and I'm selling clothes, do I have to have more inventory in order to be able to deal with when I have to go and let a piece of clothing sit in the back room while it decontaminates until the next person can try it on and potentially buy it? All of these things cost money. And again, it's really, really important for us to look at our businesses and go, what does this mean to us? How does it go forward? And what is the cost of it? And adjust our budgets and adjust our forecasting in terms of this new reality and quantifying what happens when we're dealing with that. Restaurants is another perfect example of this. If a restaurant can only open up with 50% capacity for their seating, is that enough for them to justify bringing in more staff? Is it enough for them to be able to justify making money and being able to churn enough product over, or are they going to be short? How much online delivery and takeout do they have to supplement them to get back to an acceptable revenue at level when they can go forward? The other item is that if we're going and in a restaurant environment, it's all about tables turning over. If I'm dealing with a slowdown and I can only have X number of people in my restaurant, does that mean I have less serving staff, less cooks? Does that mean that my tables don't turn over as fast? Which again, slowing things down costs you money in that environment, because the old adage of time is money is very, very true when you open a business. So you need to understand those types of items and how these slowdowns are going to impact you, whether it's going to be an increased carrying cost of running your business because you have to have more product on hand, or if it's going to be that it's just the time is money adage and that we are slowing down and we need to understand our labor costs and how we're going to be dealing with that going forward. And again, the focus on health and safety of our people. Again, even in the post-COVID world, when we have a vaccine and we can say that we're behind it and we're back to reopening, it's not going to be the same. People are going to remember what happened and this whole community spread. So this whole consideration of slowing down is critical, but also remember, what is this doing to your suppliers, your supply lines? And am I going to be able to go in and, I mean, we're not going to be dealing hopefully with face masks being backlogged and that we can't get our hands on it, but what does it mean if I can't get one of my key products onto my shelf? What is that going to do to my customers? What is it going to do to my ability to get people into my location and to be able to sell what I need to sell? And so what we have to do again is we need to be adjusting our financial models so that we can go through and understand what the impact is on our business. And again, what is the cost of having to carry more inventory? If I have to carry more inventory, is it going to be that there's going to be longer delivery time? So I have to change how my lead time in terms of my orders, which means that my forecasting needs to be that much tighter in order to be able to forecast that I need 100 widgets 2 months from now, as opposed to being able to order 50 widgets at a time because I could order a month's supply at a time. So again, when we're looking at our forecasts and our budgeting, it's really, really critical that we're understanding how this environment is changing and what it's doing to our operations. And of course, the focus on health and safety is also going to be impacting you from the perspective of what is the cost of implementing all the measures. Yeah, it's great. We can have the plexiglass around where we take payment. That's good. But are there other measures that I have to be having in place? I read an article this morning about a store in Vancouver where they do a lot of custom fitting of clothes to their customers. They're going to be able to provide masks and gloves to everybody that walks in the door. Their staff are going to be masked all the time. Again, there is a cost to doing that, and understanding that and building that into our financial models are very, very important. And then we come to the last principle, and it deals with the whole workplace flexibility. And, you know, when staff have been forced to work from home, if you were able to keep your staff on and they're doing things remotely, they've gotten used to it. And so we need to think about, okay, what does it look like when we reopen and we say, okay, guys, time to come back to work, time to be back in the store, time to be back in the warehouse or in the office. How does that impact us? And are staff going to be wanting to come back? I personally have had some staff that have said, you know what, I'm not going to come back to the office full time. I like working from home. I'm more productive. I'll come in when I have to, but for the most part, I'd like to be working from home as much as possible. And so when we look at that, what does that mean about the future space that we need? Do I need to have the same footprint that I have in my office as I do now? Do I need less? Do I need more? And when you think about that, it's interesting that we have to go and start to cost out more or less when it comes to office footprints or store footprints, because when we look at our safety protocols, if we have a lot of foot traffic that comes through our business naturally with customers, we might find that in order to keep the same number of people running through our business to come in and generate that sales volume, we might need a bigger footprint because we have to be able to spread people out further. And so then the question becomes, how much does it cost for me to have that extra square footage, and how much extra revenue do I have to generate in order to be able to meet that cost? Likewise, we might find that with our nature of our business that we might need less because we expect that our customers are going to be buying online more, or we expect that we're going to not have as many staff in because they don't feel that they need to be in as often as they are. So do we shrink our footprint, and does that improve our profitability by shrinking that? So again, looking at the measures and looking at specific to our business is going to drive what do we need from our footprint. And so then, looking at the traffic, that's going to be critical in there. And telecom companies are the ones who are benefiting right now. I know so many people that have actually been increasing their internet and being able to get more capacity at home, so that in the anticipation of them being able to work from home. So what do we do next? We've talked about all of these principles, and I think that we really need to focus right now on how do we go and adapt our business. And I think that the most important thing is we need to focus on 4 specific areas. And now, yes, we're going to be looking at our financial situation, but again, I walked you through those first 6 areas that we're seeing shift at the start, because right now it's a matter of looking at our business and how we need to retool it and understanding what we need to change. And that understanding of what we need to change is going to drive us to, how do I change my budgeting? How do I change my forecasting so that I can become more profitable and be able to come through this properly? So the first thing that we need to look at is our customer and our staffing experience. We need to put everybody at ease. Anxiety is very high in the community right now. So how do we go through and keep everybody at ease? And the biggest thing is people understand they need to be social distance. So if you're retailing, can you do an enhanced e-commerce experience? Pick up in store, pick up curbside. How do you deal with it? And what is the cost of going to that? And how is that going to change the volume of what I'm selling? Again, looking at how to reorganize your stores physically to accommodate the distance. That's going to impact your rent costs. It's going to impact potentially your utilities. How are you going to be dealing with it? The increased physical protection of products while aiming to preserve efficient operations. Again, that talks about, if we're looking at a clothing store, I try on a shirt, can I put it back on the floor right away? Do I have to shift it away? And what about hand washing and sanitizing stations? Where do I have to put them? Do I need them in my business? What is the cost of having all of that? And then again, the protective equipment, there is a cost towards dealing with that. People, human capital planning is going to be critical. And right now, we know that the cost of labor is going to go up. We know that there's going to be an increase in minimum wage coming in, and there's going to be increased tax burden coming in. It's been great that all these programs have been out and a lot of people have benefited. At some point, we're going to have to start paying for it. And we, as business owners, are the ones who are going to be paying for it. But also individuals out there are going to see increased tax rates, which is going to mean they're going to need higher wages in order to maintain the standard of living and all of those items. And so we're going to see a natural push that wages are going to be going up. Staff are going to be wanting more flexibility on shifts. So does that mean that I need to have more people on staff in total, which means that whenever you have more staff, even if you think that you're going to have the same number of hours, typically you're going to have a creep in your hours cost there. So what am I going to have to look at in terms of forecasting my staffing costs? Sick and personal leaves. If people are sick, they're not going to come into work, or they shouldn't at this point. And again, in your business, what does that mean? Does that mean that I have to have more backup, more training, more cross training so that people can back each other up? How do I go? How do I shift? And how do I look at my cost of having to have more sick and personal time, and knowing that my experience is going to be that people will miss more days of work? So how do I staff up properly in order to deal with that? And then the top performers at all levels of the business. What does this do to my top performers? How has this change impacted them? And am I going to be able to push my top performers as much as I used to in order to get what I need out of them to drive the business forward? If I don't think that I'm going to be able to push them at hard, that's going to impact my staff cost again and the ability for me to turn around and generate revenue. So how does the change in your people based on what your individual business does, how is that going to impact you financially? Typically, we should be expecting that there is going to be an increase in staff costs. And so now the question becomes, does this mean that I just have to run tighter margins? Am I able to pass that increased staff cost onto my customer? How does that work? And again, when you're doing your budgets and you're doing your projections, very, very important to be looking at those items. The merchandise and service planning, we're expecting that we're going to be seeing change consumer behavior. And so the purchases are going to be influenced by reduced purchasing power, because people are going to have, right now coming out of this, there's going to be less disposable income because a lot of people have been impacted financially by this crisis. People are going to have lower confidence, and there's going to be health and safety concerns. So when I look at my business, am I a business where I am going and I am selling something that's discretionary, that's somebody's discretionary cash flow that allows them to purchase from me? Or am I something that people are going to buy no matter where the economy is sitting right now? You need to understand that, because again, now we need to start looking at our revenue projections, and we need to be able to see what is the impact going to be going forward, and am I going to be able to get back to the same revenue levels I used to have, or I'm a discretionary business, and so I think that for the next 2 years I'm going to be at reduced levels. Those projections will help determine a lot of the items that we talked about when it comes to staffing, inventory costs, and that other item. But we also need to see that there's going to be increases in some of the other categories where value brands, health, wellness, personal safety, home delivery, subscription-based services, if you can position yourself into these areas in your business, you should be seeing what's going to be happening, be able to pivot out of this better. And I think when Acacia speaks in the coming weeks, and even Elise, it's going to talk about how do we network to be able to position ourselves with people, to build confidence in our brands, and also to redefine our service offerings. So again, things to consider when we're looking at what my revenue projection is going to be going forward. And so the last item before I kind of bring all of this together is looking at your financial situation and understanding cash is king right now. When I talk to my clients and they're asking me about the subsidy programs, they're asking me about these loan programs, the forgivable loans and all that, my big message to them has been, right now we need to be in a position where if we are able, we are stockpiling cash, because we don't know how long this is going to go on and how long till we get back to normal revenue levels. And so we need to look at how we can deal with cash preservation and generating cash. And so it's looking at, can we extend our terms? If we have a supplier that usually wants to be paid on net 10 days, can we push them to net 15, net 30 days so that we can hang on to our cash longer? People keep asking, well, what about the deferrals in, installment payments for corporate tax, GST deferrals, PST deferrals? My message is, take advantage of it. Don't spend that money because you know that you're going to need to pay it at some point in the fall. However, we want to make sure that we know that we are going to be dealing with what's going to be happening on a go forward basis and saying that, you know what, if I need this cash in the short term, I have it. And so if I've got $20,000 of GST, if I don't have to pay till September, hang on to it in case I need to borrow $2,000 against it to get me through a slow period over the summer. And then also there's tons of government incentives out there. Canada.ca has really done a good job of outlining what those incentives are. They're there, look at them and take advantage of it. And then you want to be shifting to revenue generating activities. We're past the point of hiding anymore. It's game on again, and we need to be finding ways for us to be generating revenues. As the economy starts to open up now, we need to be looking at how do we go forward and how do we start generating revenues. So as I've talked about all of this, and this is the end of the slides that I have, what I really want to now just kind of focus in on, there were a few key themes. And what it all builds towards is, how do I forecast going forward? Because I need to be able to see what I'm going to look like 3 months from now, 6 months from now, 12 months, 18 months, because we need to be able to see ourselves going through it. And there are really, in my view, three key areas that we need to be looking at. And the first is the revenue side. And as I went through the slides, I was talking about the revenue and understanding when I project out what my cash that's going to come in is, what am I going to be able to sell? I need to understand what the changes that have happened to my business and what changes are going to stay and what's going to go back to normal. And I need to go and take a look at what that means to my revenue streams. Am I going to see a drop? Am I going to see an increase? How does that impact me? And I think that when we look at our revenue, we also need to go and look at it and do a little bit of sensitivity. We can go and say, you know what, I think my revenue is going to be back to normal 3 months from now. But we need to also say, well, what happens if I only get to 75%? What happens if I only get to 50%? What does that mean to my bottom line? So when you're looking at dealing with your revenue, you really want to be sure that you've gone through and you've taken a look at, how has this changed my business? What do I know is going to happen? And what happens if things shift? And how sensitive am I? Because if at 75%, if I think I'm going to be okay, great. But if I know that at 50% I'm losing money every month, then you need to look at how likely is it that I could be at 50% of my revenues, and how long can I survive at that lower level? So when you're looking at your revenue, that's what you want to be looking at. When we're looking then next from our revenue, we need our inventory. And whether our inventory is our people, because we're a service business, or whether our inventory is physical goods, we need to look at what is the cost that I have to spend before I can generate that sale. And we need to look at what changes do I have to make with how I deal with my inventory to adjust, whether it's I need to be ordering things faster, whether I think that I can order things slower so I'm not having cash going out the door as fast as I am. Can I renegotiate the terms with my suppliers? If I'm going online, can I have my suppliers direct ship to my customers, which means that I'm not carrying the inventory cost because I get the revenue when I sell the product, or I purchase the product when I sell it. So there's no revenue cost or no cost of carrying the inventory there. And then the staffing, whether you're a service business or a retail business, we need to be looking at what's happening and seeing how are we going to be dealing with everything going forward. And am I going to have more staff? Am I going to have less staff? Is my cost of staffing going to go up? What happens when I know that I'm going to have more sick leave experience? What happens when wages go up? All those items factor into the decision of what's going to happen. And again, you need to look at your labor cost, and then you need to contrast it against what's happening with your revenue. And what's going to happen to your bottom line and how it falls out of that is going to be so critical to understand. So those are really why you want to be looking at and getting back to the core message is, I need to understand my business now, what my business used to look like, and what it's going to look like going forward. Because that's going to be what's going to tell you how you need to adjust your budgeting, how you're going to be able to adjust your profitability, and how do you come out of this stronger than ever. And don't forget, also, you need to look at your industry and your competitors. If you see that you're going to have decreased competition, is that an opportunity for you to grow? If you think that your competition is going to stay the same, does that mean that people are going to be going in and they're going to be dropping their prices to be fighting for a shrinking piece of the pie? And so, those are the other types of things that you need to consider when you're looking at your budgeting. So I wanted to keep this short. It was about 35 minutes, but I wanted to leave it open for questions because, again, I'm talking about we need to understand our businesses. So it's difficult for us to go in and just have a generic presentation that's going to cover everything. So really looking forward to hearing what you have, and hopefully I can help answer some of the questions you have.
Hey, Mario, why don't I lead off and then we can sort of get into some more questions. There's lots of conversation right now about impact to business and how challenging it is, excuse me, to just get through this period. What is a reasonable, quote, rainy day fund for businesses to hold? Current crisis aside, what should we be looking for? 3 months, 6 months? Like what's a reasonable level?
That's a big question, because I think that the answer is it depends. Every business is different, and I think the biggest issue that you have is that if you have a business that has a larger overhead component, where you have to have a larger rent, you have a lot more staff that you normally have than you would expect, than a smaller business that has minimal rent, maybe operates out of their home, doesn't have a lot of staffing. It really changes the dynamics on it. I mean, I think a good rule of thumb is a 6 month is where I would say is your minimum. Obviously, you'd like it to have a bigger runway, but I think that the more fixed costs that you have, or the larger the staffing complement that you have, the bigger, the longer that 6 months maybe needs to be, a year, that sort of thing. Also, depends on how much inventory you have, how much product you have to carry that you're paying for up front. Look at a car dealership. They've got millions in inventory sitting there. And yes, they finance all of it, but if all of a sudden they don't sell any cars for 3 months, that interest cost is building. So, again, it comes back to really understanding your business in terms of what are the costs that I can't avoid, and that's going to drive you to know how long you have to keep it going. So I answered the question without answering it.
and you did it so well. Other questions on the floor? Okay, I'll throw one more out here, because it was interesting to listen to what you're saying about government benefits and programs. And I find it interesting because there's this whole debate raging right now. Do I defer? Do I not defer? Governments would rather you pay now. Business would rather to hold the cash for a couple of months. When you see us sort of transitioning from now through to the end of whatever this period looks like, whether it's 3 months or 6 months or whatever, you noted something about, what's the repayment going to look like for business? What's the new taxation going to look like for business? If you're crystal ball gazing right now, how do we start to prepare our businesses for these additional costs that could very easily come at the end of this period, when all of the benefits have now been used and the repayment starts to go? How do we set ourselves up for that?
Well, I mean, at the end of the day, it's going to be the return to profitability that's going to be driving when we're going to have to be dealing with the taxes. The taxes are going to change in terms of how we paid it before versus how we're paying them now. And I think, in talking to some of the tax leaders internally that we have, given the way that this government has operated, they've been very focused on the top 1%. And so what we anticipate, or me crystal balling, is I think that we're going to see that the high rate corporate tax is going to increase. I think that there's going to be an increase, the capital gains rate. They've been talking about changes or eliminating capital gains tax, which would be a tax increase. I think that's going to be on the table now. And then I think also the small business deduction, the $500,000 limit in terms of how much income you can have before you start paying the high tax rate, I see that shrinking as well. So, we'll probably see some increases in corporate tax rate. Right now we're at 11%. Do we go to 15? Probably. Do we go up to 20? I doubt it. I think what they're going to do is they're going to try and shift the burden to the larger corporations, and also on the personal tax side, we'll see some shifts in the tax brackets, especially the higher tax brackets. Those will probably have some incremental changes as well.
So as we look at, and I see Bryce on the call, and he's heavily involved in restaurants and restaurant operations, of course. As we see restaurants, probably one of the probably two biggest impacted. I think salons and personal care were probably the biggest impacted, but restaurants are probably secondarily. What are some thoughts for how people set themselves up on a restaurant model where obviously staffing is a massive part of their cost structure?
On the restaurant side, it's tricky because right now you're only able to operate at 50% capacity. And that also is going to shift how you're going to be staffing your people on the floor as well. And are you going to be able to give all of your staff the same shifts, or are staff going to want to come back because they were on the SERB and they're like, well, you know what, you're not going to be able to give me enough hours, so do I want to come back yet? And so it's going to be getting creative in terms of looking at, do I bring back half my staff? Do I bring back a quarter? How does that look? But then the other side of it is that, if the government says that I can open to 50% capacity of in-person dining, that really means I'm only going to have about 30% revenue of what I used to have on the in-person dining. And so now I have to go, can I go and staff my kitchen with enough social distancing measures in place so that I can handle 30% in-person dining and still be pushing that takeout as much as possible, and finding how that balances and what that means for my staffing costs. And the other side of it's going to be is that we know servers aren't going to be able to move as fast as they were before because of the social distancing measures. There's a cost to that. And that cost is going to translate into the slower turnover of your tables, which is why we aren't going to get to that high level, that 50% capacity, because we just can't turn the tables the way we could before. So it's looking at that as well. And how does that impact my staffing levels going forward? And the part that we also need to be very careful of is that while we know that customers want to come back, I want to go sit in a restaurant and have a beer with my buddies. What does being slower mean? And does that sour somebody's experience in the restaurant? And how slow can we be before that impacts our sales?
Those are all really good points. Something I've heard a lot of conversation about, and actually I saw a lot of conversation on the weekend, is this bubble of mergers and acquisitions that's going to come late this year or early next year. For somebody who's trying to survive the current conditions, is now the time to get into and look at mergers and acquisitions for your competitors? Or is now the time to say, let's try and get through it and then we'll sort of look at what we can do?
I think that really depends on where you're at financially in your business. If you have access to credit, you have access to cash, now's the time to be starting to look at it and talk to your competitors. I talk to the other firms. Obviously, I'm not looking to acquire anybody, but we have a good relationship amongst the other firms in town for the most part. And keeping your ear to the ground and talking to everybody is important because it's going to help you know when the right time to move is. And so being able to say, okay, now I know that, what, I think that in 2 months is going to be where people are really going to be hitting that bottom point. That's going to be the time where you're going to want to start looking at acquisitions and that sort of thing, because until somebody hits the bottom point, they're not going to be in a position where they're going to really want to entertain it. That's going to be where you're going to be able to deal with it. The other side of the acquisition is maybe you don't need to do an acquisition, but maybe you can, if we know that a business is going to be shutting down, do they have top talent that you can recruit and bring in as well? And that's the other thing to be looking at. If you know that one of your competitors was close to retirement and they've got some great people, now might be a time where they just feel we're going to shut it down. Start talking to their people once you know that that's happening, and see if you can bring them on before somebody else beats you to it.
Awesome, thank you. All right, are there any other questions?
I've got one. I just wanted to ask Mario. My personal feeling is that as we all work through this process, that passion is going to keep a number of people in the market driving, and they'll remortgage their homes. They'll do a lot of things to be super creative to keep things alive. What's your take on the impact within 12 to 18 months, where we may see another big surge of bankruptcies and failures in business? I personally subscribe to that. I believe there is a passion drive, but what's your take on it from accounting perspective?
It's really tough. You know, I feel like these days I've been more of a clinical counselor than I have been an accountant. And the reason why I say that is that there is that passion that everybody has, and you know, sometimes people get really anxious, and they get down on themselves, and sometimes people are overly optimistic, and I think, you know, the reason why when I wrote the presentation, I did one of the underlining themes is to really understand your business and understand where things are going, is that now's the time where we have to really look in the mirror and we have to know our business more than ever, because that's going to be what's going to keep us safe from overextending our credit and chasing good money or chasing bad money with good money. We have to be very, very careful and know, here's where we think we're going to be, here's what's realistically going to happen, and just having that sober second thought when you're looking at it, to avoid it.